This is a trust deed and this is a letter of authority. These are two of the most important documents when it comes to controlling a trust. In this video, I am going to share the step-by-step process of setting up a trust. And at the end of the video, I'm going to share my personal opinion about the whole process. If this is your first time on this channel, please consider subscribing, like this video and share it with a friend. This really just helps out the channel. So if you appreciate the effort that goes into making these videos, please support the channel. With that said, if you want to set up a trust to build a successful property portfolio, but don't know where to start or how to do it, this video is just for you. A living trust can be a highly effective estate planning tool if used appropriately for your specific circumstances. However, this area of financial planning can be complex, and in order to ensure that your trust is validly formed, it's essential to get the registration process right the first time. The first step of setting up a trust is to be clear on your objectives. Before setting up your inter vivos trust, it is imperative that you fully understand the role it will play in your overall estate plan. Trusts can serve several purposes, which in turn will have a bearing on how they are structured, what assets are housed in the trust, and the type of trust you choose. So be sure that you are clear on what you intend your trust to achieve. A living trust can be used effectively to protect assets for future generations, keep personal assets separate from your business activities, and protect assets from creditors or reduce estate duty. So it's important to be clear on the purpose of that trust. The second step is to choose the appropriate type of trust. Once you're clear on the trust's role in your overall estate plan, you will need to determine whether a vesting or a discretionary trust is most appropriate for your specific needs. The first option is a vested or bewind trust. Ownership of the trust assets ultimately rest with the beneficiaries, while the administration of the trust and those assets remain the duty of the trustees. The trustees are tasked with taking control of the assets and managing them in the best interest of the beneficiaries. As the trustees only have administrative control over the assets and do not have any discretion, it is important that the trust deed is absolutely clear in respect of the beneficiaries and their respective benefits. The second option is a discretionary or a ownership trust. In this type of trust, ownership of the trust assets transfers from the trust founder to the trustees, whose job it is to manage the assets in line with the mandate set out in the trust deed. The trustees are entitled to use their discretion regarding the trust assets and income, including whether those assets ultimately vest in the beneficiaries, and this means that while the beneficiaries do not own the trust assets, they have a contingent right to the income or assets of the trust. The next step is to determine an appropriate name for your trust, and in this regard you have the freedom to choose any name you deem fit, and just remember your trust will be registered with the Master of the High Court and not with the Registrar of Companies, meaning that you do not need to reserve a name for your trust, so you can call it whatever you want. Just a tip from my side, if your surname is Reynhardt, don't go and name your trust the Reynhardt Family Trust. Just for extra protection and safety measures, name it something like the Cash Flow Trust or whatever name you think of. It's just smart not to include your name or your surname, although a lot of people do exactly that. Then determine which assets will be transferred to that trust and how. As the trust founder, you need to identify exactly which assets will be transferred into a trust and what mechanism for transfer should be used. One option is to use your annual donation tax exemption of 100,000 Rand per year or 200,000 Rand in the case of a couple to move assets into a living trust. This will be where you literally donate money from your personal name to your company without paying any donation tax, but you are exempt only to 100,000 Rand as an individual. This is a great way to move money from your personal name to the trust without having to worry about donation tax. Another option is to sell assets to the trust and to create a loan account in favor of the seller, although it is important that such transactions is clearly recorded in the form of a sale agreement to avoid it being deemed a donation, which in turn would have donation tax implications. Most importantly, in transferring the assets to the trust founder must relinquish control of those assets to the trustees in order for the trust to be valid. This is literally where they say control everything but own nothing. Step number 5 is to select your trustees. The trustees that you appoint will have a fiduciary duty to manage the trust and assets in the best interest of the trust beneficiaries. And it is therefore super important to choose your trustees very wisely. Ideally, you should consider someone who has financial acumen and or experience in managing trusts. Further, appointing too many trustees can cause logistical problems when it comes to setting up meetings, obtaining signatures, or attending in-person meetings. In the case of family business trusts, where trustees and the beneficiaries are members of the same family, it is advisable that one of the trustees is an independent person. Your trust deed will need to clearly set out the duties, powers and the responsibilities of your trustees, how they will be remunerated, and the extent of their mandate. Step number 6 is to name your beneficiaries. You will be required to clearly nominate your beneficiaries and ensure that they are easily identifiable in terms of your trust deed. The rights of your beneficiaries will depend largely on whether the trust is vested or a discretionary in nature, but keep in mind that your trust deed should be clear on how you wish your beneficiaries to benefit from the trust. In a discretionary trust, your beneficiaries will not have a fixed entitlement to the assets, and it remains the responsibility of your trustees to determine how the assets and income will be distributed to your beneficiaries. On the other hand, beneficiaries to a vested trust will have a fixed entitlement to the trust assets, and therefore it's important that the trust instrument clearly stipulates your intentions, bearing in mind that as the trust founder, you can treat each beneficiary differently in terms of the benefits they stand to receive from the trust. I know this is very confusing, but remember, removing or adding beneficiaries at a later stage is not a simple process. So it is important that you are intentional about choosing your beneficiaries when setting up the trust. Being highly complex in nature, your trust deed should ideally be drafted by an experienced financial expert. And this is something that I want to add to this video. I'm explaining all of the steps to you. Personally, I did not do any of the steps because I used an experienced company to help me with my trusts and my structures. This is very important because at the end of the day, even though you want to save money, it's just better to use a professional. It can range anything from, let's say, 3,500 Rand up until 5,500 Rand per trust. But remember, there's also administrative costs every month or per year to submit your taxes and to draw up financial statements. This can be anything from 350 Rand up until 550 Rand per month, or most people charge a once-off yearly fee, and it really depends on the companies that you use. There's also many different ways to use trusts. Some people will set up a family trust and a property trust. Some people will combine a company with a holdings trust, and some people will use a family family, a property trust, a company, as well as a holdings trust. And obviously, the bigger your structure is, the more expensive it will be. And this is technically your last step. It's to register your trust. You will need to register your trust at the master's office, in whose area of jurisdiction the greatest portion of the trust assets are situated. And such registration will require the following documents. The first document is a covering letter to the Master of the High Court. Take note of this. The second one is a trust registration form. Then we have a 2 signed trust deeds. This is the document that I showed you earlier. Then acceptance of trusteeship signed by each trustee together with a certified copy of each one's IDs. Then you will need a sworn affidavit by the independent trustee where applicable. You will also need beneficiary declaration forms, a JM21 form, proof of payment for the registration, and a final certified court order. Your trust will then be given a registration number that starts with the letter IT, followed by a number issued by the master's office, and then followed by the year in which your trust is registered. And as soon as the trust is registered, the trust founder must make the initial donation or sale to the trust. Usually this can be like 100 Rand, and once the Master of the High Court is satisfied that the documents are in order, they will issue you what is referred to as a letter of authority, which provides the trustees with authority to act on your behalf of the trust. It's important to note that your trustees may not conduct business or enter into contracts on behalf of the trust until they have received the authority to do so. Once duly mandated, the trustees must open a bank account in the name of the trust and register the trust with SARS. This is where you will start registering a bank account for the trust and register for a tax number. At the end of the day, having this letter of authority is basically what gives your trustees the authority to act on your behalf, and having the trust deed set up correctly and structured in such a way that you as the beneficiary or the trustee is protected in so many different ways. And this is very important because personally I don't have the necessary skills to set up these documentations, and I much rather prefer to use a company that can help me set up everything and make the process much smoother, because the money that you pay will be well worth it. If you are new to this channel, I recently launched a property course covering all of the beginner steps up until the end of making offers on properties, covering stuff like the important numbers, the best structures, how to find good deals, etc. So if you want to, consider enrolling in the course, and thank you guys so much for watching.